What's up, guys? Welcome back to another video. We're going to be talking about probability in this video. So we're going to be talking about the concept of probability inside this video. So it's more of a psychological thing. We're going to look at some charts while we talk about this, and I'm going to tell you the importance of, the concept of probability and what does it mean, right? So essentially where this is coming from is I've been watching a lot of Mark Douglas videos lately, right? I've been rewatching the videos just to get my psychology back in track. I do this a couple of times, probably once every couple months. I go back into my psychology, watch a lot of videos on psychology, just to get my mind back on track. Okay, but what really stood out to me during this session of watching psychology videos, especially from Mark Douglas, if you guys haven't watched the videos already, I recommend that you do, okay, is two things that stuck out to me was the casino mindset that he was talking about, and then trading is all probability. So they're both kind of the same, but the casino mindset means something completely different, right? So basically in those videos, he teaches you how to not care about individual trades. So simply what it means is, I can kind of explain it right here. If you go to a casino, right, and let's say you have $100, you go to a casino, you have $100, all right, and then you go to the slot machine, right? So let's say the slot machine costs $1, right, to play the game. So you're at a casino, your mindset is already that, okay, I have a chance of winning something, but I'm not going to be mad if I don't because I was ready to risk this $100. So you're going to have fun while playing this whatever slot machine, right? So let's say, you spend $10, right? You played 10 times, right? What is stopping you from playing again? Nothing, because you know that the probability is that you could win, but you know that you couldn't win. But you also know it's a game, so it's like it's not affecting you, right? You've already known how much you're going to risk. You already know what's the point of this. You know it's a slot machine. You know that you can win and you can't win. So you already accepted the fact that it's just a game, okay? So essentially nothing is stopping you from playing over and over and over and over again. You see what I'm saying? So that really stuck out to me this time because I've heard it before, but this time it really stuck out to me, right? So essentially, how does that relate to trading, right? That relates to trading in the way that, okay, you're in a trade, okay? You are in a trade. So when you take a risk, you place a trade. Let's say you lose that trade, okay? Let's say you take another trade, you lose that trade. You take another trade. Now you lost 3 trades. What is stopping you from taking the next trade? A lot of things is going to stop you because you're in the mindset that why is this not working, right? That's usually what your mindset is going to be like. Okay, what's going on? Am I doing something wrong? You automatically start to question yourself and not question like the fact that this is all probability. I hope you guys understood that. Okay, so the difference is in the casino, you're more happy to accept the fact that you're likely to win and you're likely not to win. But when it comes to trading, you're more in the fact that, okay, I should be winning technically. You see what I'm saying? So you start to think that because of your analysis and how you perceive the market that you're just supposed to win. And that is just not what the case. You're expecting to win. That's just not the case, right? I wish that was the case. And I could speak that about smart money as well. Smart money is a great strategy. Smart money, WYCKOFF, they're a great strategy. Okay, I will tell you that. But I'll also tell you not every trade is going to win. Okay, most likely than not every trade is going to win because we cannot control these markets. Simply, we are not the ones moving the price. Okay, we're not the one moving these price. Like I could say that this right here is a supply zone, right? And I could say, okay, I'm expecting that we sell from here. We could sell from here. We could not sell from here. Am I going to take this trade? Yes. Why am I going to take this trade? Well, this is where probability comes in. So here's the probability of this trade working. First of all, I know this is a supply zone. That's one thing. We took out all this liquidity here, moved to the downside. So this is essentially a swing high that made a swing low. So this is also a redistribution. So this is a valid supply zone. That's one thing that's going in my favor. Okay. That is one thing that's going in my favor. Next, we have this huge manipulation right here. If I drop the 50% of this huge manipulation, you see that lines up exactly where the market has stopped at. Cool. That's another thing that's added to my probability. Next, if I draw out this fib again, you can see that we are in premium pricing. Okay, above the 50% is premium pricing, and we have hit the 80%, which is the make it or break it. Okay, so essentially, if we do not sell from this area, the market is going to continue higher. Okay, that is one more thing that's adding to my probability of this trade being successful. The last thing is WYCKOFF, right? So essentially, I'm already seeing WYCKOFF occur here. We already seen a manipulation from this morning, so we took out all these highs, liquidity. Now, all we need to do is show us a change of character. After that is a mitigation, and we take the trade. So essentially, I know that this trade could work, this trade could not work. Okay, but what happens is, let's say this trade was to just fail. Boom. Let's say this trade will sell, and then you take another trade like this and it failed. You take another trade like this and it failed. Well, when it comes to taking that trade again, you're going to stop yourself from taking that trade, and that's where the problem comes, because this is all correct. As long as your concept is correct, because essentially everything here is lining up with the way I trade. Everything here is lining up with my rules. There's nothing here that's invalidating my rules, right? So as long as you're trading alongside your rules and what gives you an edge over the market, you have no reason to not continuously take the next trade. Because essentially, if this trade loses, the next time I see this, I'm gonna be like, I don't know if I want to take this, and I'm gonna hesitate. And then guess what? That ends up the trade that goes all the way down to take profit, right? So I know you guys have occurred that before, where you've taken multiple trades and you took in multiple losses, and then you take the next trade that's exactly the same. That's exactly the same trade, but that trade ends up going, but it's exactly the same thing as the ones that you took before. It's all probability, right? I can say the market is going to sell from here, but I don't actually know if it's going to sell from here or not. Based on what I know from smart money, WYCKOFF, there's a higher probability of us selling from here than for us to go to the upside. That's all that I know, right? So that's all I wanted to get to you guys, that we're trading probability, okay? Now, that doesn't, go ahead and tell you to not focus on your analysis. Analysis is important, but once your analysis fails, don't go to the fact that, okay, it's my fault, right? It's my fault, and I shouldn't have lost this. Why did I lose this trade? Don't beat yourself up over a loss that you followed your rules on, okay? Because if you do that, that's going to set you in a position to continuously question yourself. And the more you question yourself, the more you're going to be hesitant to take the next trade. And then that next trade ends up being the one that wins. Okay, so essentially, it's like a casino, right? You continuously spending that dollar, but in your head, you're like, okay, I'm going to continue spending this dollar because I have $100. I wanted to risk this $100, and potentially I can win something. I don't know if I'm going to win or not, but it's a game. I don't care, right? So that's how you need to be with trading. You need to consistently execute your trades. So you need to consistently take your trades. Take the next trade, take the next trade, take the next trade, take the next trade. As long as these trades are aligned with your rules. Now, I'm not telling you to take random trades now, okay? I'm not telling you to take just random and just, whatever type of trades. Take trades that align to your rules. If these trades align to your rules, take the trade, okay? But when it comes to the fact where you took a trade that aligned to your rules and it fails, do not put that all on you, okay? The market is unpredictable. Anything could happen. We're not the ones controlling this market. The banks are, all right? Let's say the bank said, okay, we don't feel like selling from here today. Go up, right? And then we sell from here. This essentially almost looks the same as this, but this is on a smaller time frame. So both of these here are valid areas. So essentially, we could not sell from here, and this would be like the exact same thing as this one, but this one is a little bit smaller. And once the market gets up here, and let's say I see the same thing, but I start to second guess myself, and I'm like, this one didn't work, so why would that one work? Well, both of them aligned my rules. The only difference is one worked, the other didn't, okay? So let's say I see the same thing here, and this one failed, and I took a loss on this. I'm going to be more hesitant here, and then this trade is going to end up going for a whole bunch of profit. You see what I'm saying? So that is the psychology aspect of probability. And that's why I have it here, because that's something I thought about a lot, and it really helps when you think about it that way. Okay. So continue to analyze your market as you do, but just remind yourself, as long as you are following your rules, take the trade. Okay. That is the point of this video. Take the trade. So the point of trading, and this comes from Mark Douglas, is taking a bunch of trades, right? So let's say I took 1 to 10 trades, and let's say out of these 10 trades, 7 of them hit stop loss and 3 of them hit TP, right? Now that sounds like a terrible, series, but let's say each stop loss, right? I lost $150. But each TP, I made $2,000. Okay, that still comes out to profit because essentially I have $6,000 in profit. But let's see, 150 times 7, right? That's $1,000. That's $1,050, right? So essentially, I came out 4,000 plus. You see what I'm saying? So around $5,000, I came out in profit, and I only lost $1,000. I'm still in profit. And let's say this was a week. We took 10 trades in the week. 7 of them were stop loss. 3 of them were TP. For that week, I made $5,000. But I took seven L's. Now, let's say the problem that comes here is, let's say after taking each L, because these L's could have been 7 L's in a row. Let's say after taking 7 L's, I didn't want to take the last 3 trades. Then what? Then I would have never gotten this profit. You see what I mean? So essentially, of course you want to have a limit, right? Of course you want to have a limit. You don't just want to keep taking L's like forever. Of course you want to have a limit, right? But after each L, do not focus on that particular trade itself, okay? As long as you know that you followed your rules and you did what your strategy told you to do, then don't worry about it. Move on to the next trade. There's nothing to study. If you have already proven your strategy and it works, move on to the next trade. Take the next trade. Don't worry about one individual trade. Now, the only way that you're going to worry about one individual trade is if you did not follow something within your rules. Okay, if you peep that you did not follow something within your rules, then you can cover that trade and you can okay, I didn't do this that was according to my rules. So next trade, I need to make sure I pay attention to that. That's all you need to do. All right. I hope that opened your eyes a little bit, because I was watching these videos and I watch a whole bunch of these videos a lot, and during this time, it just resonated with me more and more. Going through it, the more you trade and the more, time that you spend with these markets, the more you experience these things and you realize how the markets actually pay out, right? It becomes more psychological than it does technical, because if you have your technical analysis down, which me, my students, and that's what we cover our technical analysis and how to perfect it and what to look for. But the psychological aspect of it is just as important. I hope this helped you guys, right? Do not overlook this. This is very important. Okay, do not overlook this. So I'll see you guys in the next video. Peace out. I wanted to get this video out to you guys. So I hope you guys enjoyed it, and I'll see you next one.